Hello everyone. Good afternoon. My name is Priyanka Kumari, working as assistant professor in IIMT College of Management, Greater Noida. Today, I'm going to discuss about the topic Reserve Bank of India and its important function. As we all know that our country's progress is measured in terms of gross domestic product, national domestic product, national income, etc. And for this, Reserve Bank of India plays a very crucial role in increasing these factors. RBI has the authority to inject and control money supply in an economy, and because of this, inflation will be curbed on time. Now, let's start the topic. Uh, let's start a topic, and I will discuss the important heads one by one. So, starting with the introduction page. First, we have introduction. The Reserve Bank of India is the central bank of the country. It plays a crucial role in maintaining financial stability, regulating the banking system, and formulating monetary policies. Let's discuss the introduction or history of Reserve Bank of India in details. Reserve Bank of India is the central banking institution in India. It has been established on April 1st, 1935, in accordance with the provisions of the Reserve Bank of India Act 1934. The Reserve Bank of India was established as the Central Bank of India on the recommendation of the Hilton Young Commission. It is under the ownership of Ministry of Finance. RBI is the apex bank of India and known as Bankers Bank. RBI is a government bank which helps the government to operate its financial operations. The monetary policy of India is regulated by Reserve Bank of India. Now come to the next head, that is objective. The Reserve Bank of India has a primary objective of maintaining price stability while keeping in mind the objective of growth. RBI also aims to regulate the supply of money and credit in the economy. The chief objective of Reserve Bank of India are to sustain the public's confidence in the system, safeguard the depositors' interest, and facilitate cost-effective banking services like cooperative banking and commercial banking to the people. As per the RBI Act 1934, the objective of Reserve Bank of India are as follows. First one, to run the nation's currency and credit system. Second, to maintain reserves for securing monetary policy stability in India. Third, to govern the issue of banknotes. Fourth, to maintain financial stability or credit by engaging in effective activities and keeping itself free from any political impact. Fifth one is to perform central banking functions by acting as banker to the government and note issuing authority. And the last one is to promote economic growth and support planned advancement of the economy of the country. Let's move to the next head, that is called functions of RBI. First one is monetary policy. RBI formulate and implement policies to control inflation and stabilize the economy. As the monetary authority of India, the RBI implements and monitors monetary policies. It ensures price stability in India concerning the country's economic growth. Second one is banking regulation and supervision. RBI ensure a strong and stable banking system through regulation and supervision of commercial banks. The RBI defines the detailed factor of the banking operations methods such as branch expansion, bank mergers, liquidity of assets, issuing of license, etc. are responsibilities for maintaining and functioning the banking and financial system of the country. Third one is currency management. RBI maintain the stability and integrity of the Indian currency. RBI is responsible for providing the public with an adequate amount of currency notes and coins and maintaining their quality. Also, it is in charge of issuing and exchanging coins and currency. Fourth one is developmental role of RBI. RBI promotes financial inclusion and economic growth through developmental initiatives. The RBI supports and enhances the country's developmental efforts. Apart from this, it also performs a function to the bankers to bank. The settlement of interbank transactions is the sole responsibility of the Reserve Bank of India. The employment of a clearing house encompasses it. Thus, the RBI serves as the banker's standard banker. It also performs the banker and debt manager of the government. The charge of all the banking transactions of the government is the Reserve Bank of India. The Reserve Bank of India stands responsible for holding the cash holding holding the cash holdings of the government of India. Also, the RBI manages the public debts on behalf of the state and federal governments and offers new loan. It also performs the function of overseas market operations. The Reserve Bank of India regulates and develops repo repo markets, money markets, and other markets instruments. It implements money market operations, foreign exchange, and government securities. It also performs the lender of the last resort. The lender of the last resort is defined by the Reserve Bank of India. When commercial banks fails to get their financial requirements from other sources in the market, then they approach the RBI. The central bank gives loan to commercial bank. This situation is termed as the lender of last resort. Okay, next move to the next head, that is credit control. RBI performs the lending rates, RBI do the lending rates and credit availability. It monitors and regulates lending rates in the banking system to control credit availability. It performs the function of quantitative and qualitative measures. It utilizes tools like reserve ratios and direct credit controls to manage liquidity and credit growth. To control inflation, various monetary policy tools are used by the Reserve Bank of India. That is called cash reserve ratio, statutory liquidity ratio, repo rate, reserve repo rate, open market operations. Let's discuss these factors one by one. Okay, next move to the head, payment and settlement system. RBI also performs the system of retail payment systems, real-time gross settlement, electronic funds transfer, etc. First one is retail payment system. It facilitates safe, secure, and efficient retail payment transaction across the country. It ensures seamless high-value interbank fund transfers through RTGS systems. It enables fast and paperless electronic fund transfers through NEFT and IMPS. RBI also performs the function of banking supervision. It is the supervision is done by on-site examination, asset quality review, licensing, and supervision. First one is on-site examination. RBI conducts on-site inspections of banks to ensure compliance with regulations and assesses financial soundness. Second one is asset quality review. RBI evaluates banks' assets quality to identify potential risks and address them proactively. Third one is licensing and supervision. RBI grants license to banks and closely supervising their operations to maintain stability. Okay. Now the most important functions of RBI is developmental initiatives. It is done by financial inclusion, priority sector lending, regulatory sandbox. First one is financial inclusion. RBI promotes access to affordable financial services for the unbanked population, fostering inclusive growth. Second one is priority sector lending. RBI encouraged banks to provide credit to sectors such as agriculture, um, medium, small, micro enterprises, and education to support their development. Third one is regulatory sandbox. RBI facilitate innovation in the fintech space by allowing controlled testing of new products and services. RBI's monetary policy. RBI target inflation, RBI done repo rate, RBI functions also include open market operations. First one is inflation targeting. RBI set a target for inflation to maintain price stability and anchor inflation expectations. Second, repo rate. RBI adjusts the repo rate to control liquidity and influencing uh, borrowing cost in the economy. Third one, open market operations. RBI performs the functions of buying and selling government securities to manage and control to manage money supply and interest rates. There are some challenges faced by Reserve Bank of India. First one is managing inflation and growth. Second one is financial inclusion, and the third one is maintaining foreign exchange reserves. First one is managing inflation and growth. Reserve Bank of India navigates the delicate balance between controlling inflation and promoting economic expansion. Second one is financial inclusion. RBI strives to ensure access to financial services for all sections of society, promoting inclusive growth. Third one is maintaining foreign exchange reserves. RBI actively manages and maintains sufficient foreign exchange reserves to safeguard the economy. Okay, what is the impact of RBI's policies on an economy? Let's discuss the impact one by one. First one is inflation control. Second one is exchange rate stability. Third one, financial stability. And fourth one is economic growth. First, inflation control. RBI measures curb inflationary pressures, maintaining price stability and preserving the purchasing power of the rupee. Second one is exchange rate stability. RBI manages exchange rates to ensure minimum volatility. Support. RBI manages exchange rates to ensure minimal volatility. RBI manages exchange rates to ensure minimal corruption, supporting international trade and investment. Financial stability is the third one. RBI's regulatory oversight safeguards the stability and resilience of the banking and financial system. Fourth one is economic growth. RBI's policies foster a conducive environment for sustainable economic growth and development. Last one is conclusion. Before going to the conclusion, I would like to add one more heads about Reserve Bank of India, that is its structure composition. Affairs of the Reserve Bank of India are regulated by a central board of directors elected by the Indian government according to the Reserve Bank of India Act 1934. These directors are elected for 4 years. Official directors are full-time directors. It includes governors and less than 5 deputy governors. The governor of RBI in 2023 is Sri Shakti Kanta Sir. He is the former secretary of the Revenue Department, Ministry of Finance, and Department of Economic Affairs. He assumed charge as the governor of RBI on December 12, 2018, succeeding Urjit Patel sir. The tenure of the government of RBI is 3 years. An individual aiming to become the governor of the Reserve Bank of India must fulfill the following criteria. The first one, she must be a graduate of a recognized university. Second one is she must be 35 years of age. Third, she should not be a member of parliament or state legislature. So, coming to the conclusion, RBI is the guardian of the stability, first one. Second one is RBI is a visionary guide. And a third one is RBI is a catalyst for change. The first one, RBI with its multifaceted functions plays a crucial role in maintaining financial stability and fostering economic growth in India. Second one is visionary guide. Through its strategic initiatives and policies, Reserve Bank of India is shaping the future of India's financial landscape, steering it toward prosperity. Third one is a catalyst for change. RBI's relentless pursuit of progress and innovation ensure a resilient and dynamic banking system for a brighter and inclusive future. Thank you.